there you have it. The markets are officially closed on this Wednesday, August 6th. Welcome, welcome, welcome. With me, I have NODLive from our NODLive news feed. Many of you are subscribers already. If you're not, make sure you catch the scan code as it goes by on the screen. We have a lot to talk about, Nod. The markets just closed, as I mentioned, and we had a little bit of a sell-off. I think that was profit-taking, intraday profit-taking. We had a little bit of a sell-off in the last 10 minutes of the trading day, but there are a lot of trading opportunities out there. What do you have to report?
AJ, good afternoon. It is Wednesday again, and as per usual, there's no shortage of things for us to cover. As always, thank you for all who take time to join us live, and for those who take time to join us on the recording, we appreciate you opening up your busy lives to us. Listen, AJ, I know you like to take deeper dives on the major indices on Friday, but I can't help but look at the S&P and where it is right now. As of yesterday's close, you'll see on this chart that the S&P hit its most expensive valuation in 4 years. Now, you add on with today's gains, and it continues to strive to new levels. So, AJ, will you kick us off here with a bit of a deep dive here, maybe revisiting with your fan lines and show us what you see with the S&P in general?
Sure. We looked at the fan lines last week, and I'll just give you a recap of what's happened since last Wednesday. You can see that this is the long-term, very long-term, going back to 1920s of the S&P. And as I zoom into the most recent time period, you can see that the trend overall has been accelerating. And these fan lines do nothing more than represent the accelerated trend line. And so when you start to go vertical, that is unsustainable growth. And we see that right here. This is a monthly chart. As I zoom into the weekly chart, you could see that last week right here, as I magnify that, we had a bearish engulfing candle. And if you're brand new to candle charts, understand that the bearish engulfing candles are one of the most bearish candles you can get. 80% of the time when you see that show up, prices drop in the candles that follow. And so this week, while it still is green, we still have a couple of days left. We are now down below that most vertical fan line. So give it a little bit more room on the downside, and what you'll most likely see are the professionals and even the traders are going to start running the stops. And what that means is as the price goes up, investors and traders use stop loss orders to protect against a pullback. And so over time, those stop loss orders stack up. And what they do is they push the price into the stop loss orders, and it triggers off a whole bunch of market sell orders. And we could see that. We're not there yet. I thought we might even see that last Monday. We didn't see it. We're not at that trigger point yet, but it's something you definitely want to keep an eye on. As I look at the daily chart, you could see that we did fill this gap right here. This was a gap that was left last week on Friday. And so now the gap is filled. 80% of the time gaps do fill. If you're following my reports, you know that already. But here's the part two of gap fill rules. Once the gaps fill, you now have an 80% chance that prices will reverse. And we haven't seen that yet, but there's a strong possibility that that could happen. Now, Nod, you know, as well as any of our members know, we have the majority of our positions are still long. We have slightly bearish negative delta position on the option side. But if we start to get some support levels broken here, we're going to quickly change our positions and start to go the other way.
No, we trade the market we see, not the one that we want. And, you know, we've had a majority of blended directions, with our matrix trades being predominantly bullish and doing well. But our longer term view of having a bearish exposure has helped us sleep at night. So speaking of sleeping at night, AJ, I wanted, after a bit of a pause and so many companies getting other attention, NVIDIA is hogging the spotlight again in headlines as it hit another record valuation. I don't want to pick so much on NVIDIA, but rather the entire semi sector here. So I'm pulling up my chart here to give you an idea of what I'm seeing. Now, I'm not quite the pro you are, but I'm seeing a double top in the SOXX. So, AJ, can you let me know what you're seeing on that, and maybe NVIDIA, please, just for our viewers?
Well, NVIDIA is still mainstream, and they're the mega cap stock that a lot of the institutions are putting their money into, because they have to put their money somewhere. And you'll have a lot of the higher price stocks, especially the mega cap stocks. You're going to have the institutions parking their money there. But if I do the same thing that I did on NVIDIA with S&P, look at that chart. I mean, if I start drawing fan lines here, I'll just do it with my little drawing tool. Here's fan line number 1. Here's fan line number 2. You take the last touch of the trend, go up. Here's fan line 3, and that's just a monthly chart. That's unsustainable growth. Now, we do not have a position in NVIDIA. I cannot get myself to buy into that. However, there, I look at that as an opportunity for when, not if, but when that trend breaks. This is the weekly chart. You can still see the upward angle there of that trend line, but it's still intact. It's still intact. Once that trend breaks, I think you could see a good pullback to that moving average. Now, I see some ticker symbols coming in there. John's looking at Tesla. I'm going to throw this in there. I know you got a cadence there, John, but I'm looking at Tesla right there. Tesla is in a triangle pattern. Again, this is the weekly chart. And if you're following technical analysis in any way, shape, or form, you'll know that triangles will ultimately break when the price gets into the apex. In this example here, Tesla back in 2023 broke out to the downside, and we're coming into that apex, like I just mentioned in Tesla. It could go either way. It's hard to read that one, but if you look at the daily chart, you got a nice little bullish candle right there, bullish engulfing. So on the short term, I think you could go a little bit higher on Tesla, but you got to watch that weekly triangle that's forming on the longer term charts for sure.
Well, that's awesome. Thanks for that color. Now, listen, we got to keep moving here because we've got the Fed. They can't stay out of the headlines. Anytime we do talk about the Fed, AJ, we do think of rates. And given how split much of the globe is in the headlines with where we are and with all the comments, especially today from Fed Governor Neil Kashkari, he said two things today. Listen, he said the Fed may need to respond to a closing economy, alluding to cutting rates. But then he said if inflation rises because of tariffs, the Fed's going to have to raise rates. So no wonder the housing market is in a free fall and in a frozen hell. I see Tim Lindsay's on. So I'm going to share this. I'm going to share this chart here. AJ, home sellers have outnumbered the number of buyers by 500,000 in June, the largest gap on record. So AJ, can you please look at the 3 times levered home builder ETF nail, and then maybe a glimpse of Toll Brothers, TOL?
Yeah, and I was just looking at the interest rate on the 10-year. And it looks like we're getting a pivot to the upside. Now, a lot of the folks that are watching our program here are always seeing the sell signals showing up, right? But I got to say, now, again, I'm not going to put a recommendation out on this one. However, there was an analyst on CNBC many years ago who would call this the rounding bottom or a saucer bottom. That was John Murphy. For those who have been around long enough will remember John Murphy. And he always talked about saucer bottoms, and that the longer the base, the higher in space he would talk about. Right now, there's home builders out there that are selling homes because they're holding the mortgages, right? That's something that will get the home sold, but they're basically holding that big nut in the form of long-term debt. So I think this one still has some upside to it. And for the option traders, you got to understand that this one has a nice selection of options. So you could even do some calendar spreads on here if you like. And they got not a super tight market between the bid and the ask price, but they have enough liquidity for you to take a position in this sector here. But I like that on the candles right there, because as long as it stays over that 20-period moving average, and I think it could pull back to it, but as long as it bounces like it has off of that 20-period moving average, I would be looking to buy it on any of those bounces off of a trend line or off the moving average. And I could care less about what's happening with the tariffs. They so far have been proving all the experts wrong, that the tariffs have really not had a great impact on inflation in a negative way. And we'll have to see how that plays out. But there is a lot of pressure on the Fed. We all know that if you're paying attention to the headlines, or if you're paying attention to the NODLive news feed that Nod puts out. But yeah, longer term, I like that to the upside. On any pullback, I'd be more of a buyer than a seller, for sure.
Now, I've got to go a little bit rogue here. I want to make sure that our viewers are happy. I see Jeremy Z is in there. He's asking us about TLT. He says he sees quite a heck of a candle today. Can you, just keeping it relevant with where we are, what do you think about TLT today?
Well, TLT, this is a pivot here. And I did have an upside target on TLT. up to that level right around 89. It looks like it's bumping its head against the most recent resistance right here in June. But that is definitely a pivot. And you notice the volume down below. If you had any eye on the Technical Tuesday video that went out yesterday, I was talking about how price can help forecast the pivot points. And if you look at what happened on the way up, right, and go back and review that video. It's a very short 8-minute video. As the price is going up, you see here the volume is dropping. So that was yesterday and even on Monday telling us that get ready, we're about to see a pivot. And guess what happened today? We got the pivot. So I think TLT could drop just a little bit to that moving average, and then we'll have to see if we get a bounce off of that moving average. But right now, down below, the oscillators are showing more negative than positive, with the CCI down below being my most favorite. There's the CCI right there. That CCI is showing a sell signal today. So be careful for anyone who's long TLT. I'll be keeping my stops in place for sure.
All right, so thank you. So AJ, last week we spent some time on IWM, and mainly because people are most familiar with it. But for those that don't know, IWM is actually not the largest small cap ETF. There's one that's called IJR, and I bring that up because AJ, if you look at this chart, small caps have seen their largest outflow in history. I mean, it's not even close. So I'm not sure what this tells you, but I can't ignore data like that. So for those that haven't looked at or traded IJR before, can you give me your thoughts on that, and maybe we can talk about what the wider implications are on that?
Well, one of the things that I repeat over and over and over again is the whole concept of role reversal. And role reversal is basically where you have a support level that is broken, and at the break point, you generally get those stops. So you'll see them running the stops. But once it drops down below support, former support turns to resistance. And the reason I bring that up is because if you look to the left, all the way back here at the low from the end of 2024, and I draw that straight across, you're going to see that the price is pretty well matched at this new resistance area here. Now, the Russell, along with many other stocks that are now below that former support, they're going to have a tough time getting their heads up above that line right there. And not only that, but you could see how my role reversal resistance is closely matched with that blue line, which is the 20-period moving average. So remember what I said about volume. You got to keep an eye on volume on the way up. At this point, if you get any kind of a drop, we're getting a slight drop now in the volume. You see here yesterday especially, but if you get a drop on Thursday and into Friday, you're most likely going to see this one pull back and do a reversal. So be careful of any long positions in the small caps for sure. Now, I don't trade this one, but there are options that you can trade on the short term, and they're not that bad. There is some efficiency there, but I don't see big volume on these like you would normally see in IWM. You get a lot of volume, a lot of open interest, and the markets are a little bit tighter there for sure. Welcome, Wade. And we got, who else? Eric, welcome. Tim Lindsay, John, Jeremy, Dan. Oh, we got a lot of active chat people here. I'll tell you, thank you for joining us on the live broadcast here. All right, now, yeah, go ahead.
I was just saying, before I go into other commodities, I mean, we're getting a request in our live chat for natural gas. I don't mean to throw you off kilter, but would you mind throwing up NG and letting us know what you think?
Okay, the futures we could look at for sure. Now this one, I would be more of a buyer, no doubt about that, because if you look, I'll draw this line out pretty evenly for you here. You see the low that we had back in January of this year? Well, that low pretty much held right here into April and May. And then if I draw that out, look what we see here. We have a pivot forming today, especially with that higher low, higher high. Now, this is the futures market, but you could also look at UNG. If you're looking to trade this, you got to pivot as well here off of a key support level. So here's a stock that's fairly priced. I mean, I think most people that are in the market could afford a $13.50 stock, but they both look very, very similar as they're bouncing off of support. Now, if we go back to the futures, I don't want to make anyone dizzy at flipping, but you look at that, where would I put my price target on natural gas? I would go all the way up here to around 3.5. Why is that? Because you got an open gap right there. And this one does a very good job filling those gaps. I could go back and show you the history of what I'm talking about here. Here is a gap right here. Took a while, but guess what? It filled. Here's another gap right there. What happened? It filled, and then it reversed, right? Here's a very small gap, just by pennies. It filled and then eventually reversed. And so we still have the open gap up at the top here, right around 3.5. This, by the way, was on my list for the equity traders, the UNG, by the way, but I went with another position. I can't give that away because those are paying members. But UNG was on my watch list. I was looking at that. I didn't pull the trigger on it today, but it doesn't say I won't pull the trigger on it tomorrow. This is a great market to trade, by the way. You got natural gas. You got, you might talk about silver. I don't want to rain on that, but silver is looking good. And I don't know what that noise is, but we got a lot of static. I apologize for that, folks. But yeah, what do you have as far as the other metals?
Yeah, so AJ, I want to bring us home. I'm going to use your line and say I'm going to do a three-parter. You usually do two parts. Let's do a three-parter.
Three-part.
We've seen some insane moves in copper, and it's been in the bullseye of the current tariffs and discussions and headlines. So when I pull up this chart here, AJ, China is currently having a record output in copper, which is great. It's a boom for them. But with these impending ore shortages, what are you seeing in copper? And then to dovetail off of copper, that's going to impact gold and silver because those are byproducts when you mine copper. So if you wouldn't mind doing a three-parter on copper, gold, and silver, I'd appreciate it.
Well, copper was one of the metals that we traded on COMEX. They had this very small trading floor back behind the coat check room, believe it or not. Greg Montwell, if he was on there with us, he'd be telling you stories about that place. But this was, in my opinion, an overreaction to the news that came out last week on tariffs that would affect copper and the copper miners. But I think this is way, way oversold. If you take a look at the weekly on this one, look at that red candle. That's the longest red weekly candle in the history of this market. Now, the beautiful thing about this one and why I'm so bullish on copper is that it held the trend line. You see that? I'm starting that trend line back in October of 2023, and all I'm doing is I'm connecting these lows. And you don't have to be exact. For the engineers out there, don't worry. It doesn't have to match perfectly. You're just connecting as many of those lows as you can. And so we get a bounce off here. All you need is a little bit of a drop in volume, possibly next week. And you're going to see the CCI down here turn very, very quickly into a buy signal. So I do think that copper has a very strong upside potential here, which means that stocks like FCX, SCCO, I'll show you another one here. COPX is one that I'm looking at. This is one I like because it has options. But look at that weekly candle. You got a bullish harami right there. And you do have options. And they're not too tight. The bid-ask spread is still wide. But for the option spread traders out there, that's how you get around the wide bid-ask spread. You just trade it in spreads, either vertical spreads or horizontal spreads, and I think you could do pretty well. Another one is ICOP. For those that are looking for another one to trade, this is the iShare Copper and Metals Mining ETF. And like what we just saw in COPX, we have a beautiful bullish harami right there off of, guess what, a roll reversal support level. So this is the opposite of what I just showed you. This is when resistance, once broken, holds and turns into support. So I think you could see some upside here as well on those stocks that we just mentioned, COPX and ICOP. And if you're a futures trader and using the Thinkorswim platform, it's /HG. That's for the futures traders out there. Keeping a close eye on the chat. Hey, Alan. All right, go ahead.
All right, so we did copper, but let's do a little bit of gold and silver because we have some requests in there, please, and then maybe we can do a couple other things with the remaining time, please.
All right, now here is silver, SLV, coming up right there, and I bought some more earlier in the week to balance out the position, and even after I bought it, I still think it could drop a little bit because as of today, look what happened to silver. It filled that open gap that was left last week. So I do think silver could drop just a little bit. I don't think it's going to drop tremendously, but I think it could pull back from that 20-period moving average, regroup, and then I think you're going to see over the coming weeks and maybe months, I think you're going to see them take out that high in silver. I don't see anything that's going to get in the way of silver going to $50 an ounce. I don't see it. We just heard about what's happening in China. They're cutting back on their mining for copper, which again, silver is a byproduct of that mining process. There's already a shortage of the supply. If you look at COMEX, the delivery notices from July were full bore all the way. And so COMEX is scrambling right now to find the physical metal, because if they send out the same delivery notices, or send out if the futures traders take delivery in August like they did in July, COMEX is going to be in a problem with regard to a possible short squeeze on COMEX. Now, that could work its way into something much bigger as far as the short squeeze. But when you look at the monthly chart on silver, I mean, this thing is not quitting. This looks like the NVIDIA of precious metals. And what I'm talking about up here is I think you're going to see silver make a run for the all-time highs. And this is all part of the breakout of a elongated cup and handle right here. So you could see that there's still a lot more room to the upside. Now, as far as gold, because you mentioned gold does not look as bullish, but I think it's starting to consolidate here. This is the monthly chart for gold. Looking at what I'm talking about here, this is the consolidation that I'm talking about. It's more or less channeled at the top. Now, some of the technicians out there might look at that as a bullish flag, perhaps, with all this being the flagpole. You could look at it that way, and I would agree. And if we do get gold breaking out over GLD breaking out over 320, you could see that run in the same intensity as silver. But I think silver overall, as far as comparison between gold and silver, I would much rather have silver as the bargain metal over gold at this point. And it's not to say you shouldn't accumulate gold if you're a gold stacker, but I think there's much more opportunity on the side of silver for sure.
That's great. Well, listen, I'm actually going to throw us a curveball here, because what you and I are going to be doing in about 90 minutes is for our members, you're going to be fielding and forecasting about 50 tickers. People are going to bring them in. They're going to rush in. We're going to get them to you. We do have a lot of people on here that are newer and that are asking us for some tickers. So would you mind just fielding a few tickers for me, AJ? I'm just going to throw them at you, keep you on your toes.
Throw them out. Let's go.
All right. So our friend Luis, he'd like you to look at Coin, please. COIN. This will do a little bit of a coverage.
I like this one. We have a position in this. It's doing extremely well. Coinbase, obviously, you can see is gapped down. And look at all of this red down here. We call that a stale red light. I'm not even going to take the time to count all that red, but it's a lot of red candles there on the volume. Today is the first green that we're seeing that breaks up that red. Now, we do not have a pivot because we still have a lower high and a lower low right here. But I think tomorrow, and I'm going out on a limb on this one for sure, but I think tomorrow you're going to see a pivot in Coinbase, and I think you could see it rally back up. And I wouldn't even be surprised over the next couple of weeks to see that thing rally, $18, maybe $20 to the upside. Now, some people might say, oh, it's not a big deal to make a forecast like that. You're not making a big stretch for targets. Well, if I had long-term targets, we wouldn't have the next live report until next year. We got to keep the action going, right? But for the option traders, you get a $20 move in Coinbase, you could make some good money in the percentages of return on an option spread because you got that leverage. And if you've never traded an option in your life, come on over to StickyTrades. We'll show you how to do that. That's what we talked about. Well, what's another tip that you have?
I've heard of it before. It's called Apple. This is from our friend Warren. It's in almost all the major indices. They got a nice little pop today because they're gonna invest quite a bit of money in the U.S. and I think they're gonna get off the president's naughty list.
Yeah.
But from the technical side, what do you think?
I think this one's ready for a breakout. Actually, this was a pretty impressive green candle. Yes, it was on news of Tim Cook going to the White House. But if it breaks out tomorrow of this high right here, that's the resistance that you have to keep your eye on. And we did have good, strong volume today. Let me zoom in so you could see that. This is another green candle that broke up all this area of red. But look down below. You see that CCI? It's crossing over the 0 line. And when that happens, you generally, and here's the big word, generally get 2 to 4 days of movement in the direction of the cross. So being that today is day 1 and that big green candle, we could see at least another 1 to 3 days of upside. And again, if that happens, you got a breakout, which would bring it closer to this resistance up here, closer to 228, and that would fill the gap that's still open on Apple right there. See that big gap? And that gap, like any other gap, there's an 80% chance that gap is going to fill. Once it fills, watch out below. If anyone's long, you got to make sure you protect your profits along the way, especially after that gap fills, for sure.
Yeah, and anytime a name like that has that type of a move, it has ramifications across all the indices and fellow members as well. So that's one we'll be watching. If you have time for one more, we've got a couple requests for Tesla. I know this is another bell of the ball, and it's been very busy, and it's been on everyone's screen. So it looks like it had a little consolidation right there. AJ, what are you seeing right now?
Well, we talked about Tesla with that triangle pattern here. So you got to watch that. I think it's more leaning more towards a breakout of that triangle to the upside. And again, like Apple, you see that nice big green candle, the exception being that Tesla has now closed today, officially closed over the 20-period moving average. Now, Tesla's already hit my short-term target here. It does a great job. For those that are just joining us for the first time, all these diagonal lines that you see on my chart, those are the price targets that I put out for our members on every Rapid Fire Wednesday. We go through 50 stocks in an hour, and I put price targets on them very, very quickly. So you can see, obviously, that Tesla has done a great job hitting price targets, with the last downside target hitting like a champ. Now, I'll go out again. I'll put a price target on the midweek report live, again, to test that high. And for the option traders, I think you could see 320. I'm going to round that down to make it a little bit easier for the scorekeepers out there. I'm going to put a target of 329. Again, you're talking about $19.09 to the upside. And if you're looking to make a trade on that, look at these options. The September options, you can go out to the 360 strike, buy some out of the monies, and for under $800 per option contract, you could get long Tesla instead of having to come up with $319 a share, which is going to be a lot more to buy 100 of those shares. One option will control 100 shares of the stock for under $800. That's the way I like to trade. I go further out. I might even go out to October to give myself a little bit more time. But that, I think, is a pretty safe target on Tesla at 329. You all could hold me to it. This is being recorded. I'll be more than happy to report back on that. All right.
All right. So listen, with our remaining time, AJ, I'm going to ask you a little bit of a strategy question. We've talked about the billboard names like NVIDIA, Tesla, Apple, and there are people that they have to own them and they have to hold them. And then someone had asked about selling covered calls. Can you just briefly explain the point and the strategy of selling covered calls against a position that you just absolutely have to own and you can't sell?
Well, let's use Tesla as an example because we only have 1 minute to go. But let's say you own that stock and you own 100 shares of that stock. You're talking a lot of money in that position. But the market will pay you to sell your stock up there around $360. Now, that's not a guarantee you're going to sell it at $360, but there is an option you can sell that will obligate you to sell the stock at $360. And if you look at the premium here, you'll see that even going out to September, which is where we were, look at that. Someone is willing to pay you $7.75 a share to hold your shares for sale at $360, which is over $40. So if you're okay with selling your stock higher, why not get paid to sell it higher? That's how a covered call works. Folks, we're right down to the last 30 seconds here. I just want to thank each and every one of you for joining us. Please, once we post the video to the YouTube page, feel free to add more comments or questions, and we'll do our best to pick them up in the next session, which will be next Wednesday as we put out the weekly market report or the midweek report live with NOD. Thank you so much. Have a good rest of the week. So long.